on Business Incorporated today. South Africans protest power cuts and load shedding by ESCOM. IMF boss Kristalina Georgieva concludes a 4-day visit to Zambia. And Algeria signs 2 agreements to fast-track emissions reduction. Good afternoon. Welcome to Business Incorporated here on Channels Television. I'm Ini John Mekwa. Let's check in with the market, starting with Africa as usual. And what we have is Nigeria has recovered, even though it's mild at intraday 0.03%, hoping it builds up on that at the close of trade. South Africa is, however, in the red, 0.18% at 74,821. Looking at other parts of Africa, Egypt is very good, 2.34%. At intraday, 16,824.58, while Kenya, back to that red zone that it's been for a while, closed down 0.29%. And still staying within that area, the Ghana Stock Exchange has approved an extension for financial reports filings to Access Bank, Ghana, EcoBank, Ghana, and others. The extension was granted following a request by the Ghana Association of Banks on behalf of the listed banks for the filing of 2022 audited financial statements, which was now expected to be extended by a month and close in April. According to the African Market Report, this would enable the 8 banks to work effectively with their external auditors to achieve the audit objectives. Other banks that received approval for extension include ADB, Carl Bank, GC Bank, Royal Bank Ghana, Standard Chartered Bank, and Societe Generale. And then we move to the Middle East. Abu Dhabi had a lot of negatives at intraday. And then looking at the numbers, Abu Dhabi is down 0.68%. Dubai also follows suit at 3,360.19, down 0.11%. Let's look at others now. Saudi Arabia following even the red figure there, red number, there's 0.6%, and Qatar is the only positive at intraday, 0.51% at 11,161.92. Well, let's go to Europe now. Since the beginning of this year, there's been a surge in interest in artificial intelligence becoming the new thing in the world, especially after the release of ChatGPT, and all of us have heard of that. A function that demonstrates remarkably human-like capabilities in its ability to respond to questions. Well, China and the United States have led the way when it comes to research and development, but in Europe, efforts to both encourage more investment and to regulate technology are already well underway. We have Kate Ferguson now joining us from Berlin to tell us how far they are going. Kate, good afternoon. Well, first of all, let's get reaction of businesses. How much acceptance are they giving to this artificial intelligence?
So European companies have been getting increasingly excited about AI. And while the continent does lag behind China and the United States when it comes to development speed, for example, over the past few years, we've seen a rise in investment in AI in areas as diverse as healthcare, fintech, marketing as well. And that is something that EU officials really want to encourage. The European Commission is actually aiming for an investment of 20 billion euros a year in AI over the next decade. That's from both the public and the private sector. And over the past few months, things have really been heating up. We had the news there of German company BioNTech, that's a household name now because of the COVID-19 vaccine it developed. It recently announced that it would be acquiring UK startup InstaDeep. That's with the aim of using AI to discover and design new drugs and potential immunotherapies as well. I think this really could mark the beginning of a growing interest in AI from Germany's pharma industry. And of course, course, Europe is also looking at what's happening elsewhere. The recent news that Microsoft could be investing as much as $10 billion in OpenAI, that's the company behind the ChatGPT platform. This has also made waves here. So altogether, I think AI really is being seen as a promising investment with a lot of potential for the future.
Yeah, another interesting area is the regulation, even the crypto space. Yes, after regulation is still a major topic. How is that going when it comes to AI?
Well, of course, well, the European Union is certainly known for being keen to regulate, especially when it comes to data protection. The GDPR rules surrounding the transfer of personal data, they were introduced in 2018 and quickly became a model for many other countries around the world. Now, when it comes to artificial intelligence specifically, policymakers have to balance the desire not to fall behind with their very real conviction that the ethical implications of this kind of technology need to be addressed before it's too late. Now, on a legislative level, it's tried to do that with what's known as the AI Act, a version of which was passed in December. One of the things that this legislation does is assign AI to various risk categories. One example of what the EU deems an unacceptable risk, for example, would be the kind of social scoring systems that you have in China, where citizens and businesses even can be monitored and assigned to categories based on their perceived level of trustworthiness. But of course, by definition, legislating for AI is extremely difficult because the pace of development is just so extraordinarily fast. So as you might expect, this regulation has been criticized widely by those who say it will stifle innovation and also by others who say it doesn't go far enough.
Then looking at investors' sentiments now on the market, how are they reacting to all of this attention on AI?
Well, of course, regulation is a major concern. They don't want to be putting their money into a technology that runs the risk of being banned anytime soon. But overall, I'd say investors see the possibilities as far outweighing the risks. And the potential applications are enormous, especially in pharmaceuticals and increasingly in creative industries like design and coding as well. That said, though, there are also growing calls for a serious conversation to be had about how AI may affect society in the future, not just in terms of replacing human jobs, but also in areas like mental health, military strategy, and even the potential for AI-generated lobbying. This truly is uncharted territory, and the advice to investors might be to tread boldly, but with their eyes wide open to how powerful and potentially dangerous AI could be.
All right, okay. Thank you so much for that attention on AI. I'm sure it's the future going from now. Well, let's look at the market in another region now. Asia-Pacific shares traded mixed on Wednesday, taking the lead from Wall Street's struggle for direction as China and Hong Kong markets remain closed for the Lunar New Year holidays. Let's look at the numbers now. I don't have the numbers yet. So in South Korea, the Kospi rose 1.39% to close at 2,428.57. The Kasta climbed 2% to end at 732.35. Japan's Nikkei 225 added 0.35% to 27,395.01. Other topics inched up 0.39% to 1,980.69. Australia's S&P AX 200 declined 0.3% to 7,468.3 as the country's inflation hits post-1990 peak. Markets in China and Hong Kong, as we said before, are still closed for that lunar holiday. New Zealand's fourth quarter inflation reading is up 1.4% quarter on quarter. Overnight in the United States, major indexes traded sideways, with the Dow Jones Industrial Average closed on a third day of gains. Well, talking about the United States now, stock futures fell in early trading on Wednesday as traders poured through latest batch of corporate earnings. Futures on the Dow Jones Industrial Average futures slipped 226 points. Nasdaq 100 futures shared 1.2%, and S&P 500 futures fell 0.8%. Shares of Microsoft, receiving not very good attention, dropped 2%. Initially, shares rose after the tech giant posted fiscal second quarter per share earnings. had exceeded analyst estimate. But let's hook up with our correspondent in Washington now to give us details of Tuesday's trade.
The U.S. stock market closed mixed on Tuesday as the Dow Jones was up by 0.31%. The S&P 500 was slightly down by 0.07%, and the heavy tech Nasdaq was down by 0.27%. It is clear that many investors are not quite sure where the market will end up in the next few weeks. But that was not the only challenge on Tuesday, as many securities on the NYSE were not able to begin bidding at 9:30, as it was stalled until 9:50 for some securities. This has caused some concern about the technology that is being used on the NYSE. Many investors are also watching to see what will happen on the first week of February, as it expects the Federal Reserve will slightly increase interest rates. And what kind of impact could that have on the U.S. stock market?
Thank you so much, Maria. Let's head to the global oil market. Crude oil prices rebounded on Wednesday as demand recovery helps in top importer China following its exit from COVID pandemic curbs provided support after prices dropped in the previous session on concerns about global economic growth. Brent crude futures gained 59 cents to $86.72 a barrel after falling 2.3% in the previous session. U.S. West Texas Intermediate crude futures rose 46 cents to $80.59 a barrel after having dropped 1.8% on Tuesday. Economic worries were exacerbated by a bigger-than-expected build in U.S. oil inventories that was reported after the market settled on Tuesday. U.S. crude stocks rose by about 3.4 million barrels in the week ended January the 20th. That's according to markets citing American Petroleum Institute figures. In the metals market, gold prices traded in a tight range on Wednesday as investors stayed away from taking big bets ahead of U.S. economic growth data, which is expected tomorrow. While expectations of slower interest rate hikes from the Federal Reserve kept bullion's outlook bright. Spot gold was steady at $1,937.09 per ounce after hitting its highest since late April 2022 on Tuesday. U.S. gold futures was up 0.2% at $1,940. Market focus is now on that fourth quarter U.S. GDP that is coming out tomorrow, which could set the tone for February's January 31st to February 1st policy meeting. The market is now taking a clear direction ahead of the U.S. GDP data and the federal meeting. And that's what market investors and analysts are saying. Most investors are expecting that the Fed will raise rates by 25 basis points by the next meeting. Let's take a break now. When we come back, we do have stories from the African continent here in Business Incorporated. To stay with us. Welcome back. Still watching Business Incorporated here on Channels Television. Well, our correspondent in London has been in Tokyo since Monday, bringing us up to date on the Nigeria-Japan Business Forum, which officially opens up today. And we do remember in the morning we spoke with the Minister of State for Budgets, Mr. Clem Agba, who is at that event. And well, a lot of conversations have already started, according to our correspondent, Juliana Olayinka, who sent in those visuals that you're looking at the moment. It starts today to end on Friday, and every factor affecting investment and ways to make Nigeria a desired destination for investment is being discussed there, from the issue of security to the issue of ease of doing business, bureaucracy involved in doing business. All of those are parts of the conversations going on there. We do trust our correspondent, Juliana, to give us more updates in the days to follow, just before that event ends on Friday. Now we go to South Africa, where hundreds of people have taken to the street in Johannesburg and other parts of the country to protest the prolonged energy crisis causing record power cuts in South Africa. The cities of Johannesburg and Tshwane are launching drives to update prepaid electricity meters in the metros this year. The current prepaid electricity voucher system used in the country will run out of voucher sequences for the unique tokens produced specifically for each meter by the 24th of November 2024. And the current standard transfer specification system has been in place since 1993 and will stop dispensing voucher sequences at the same date. Now we have joining us from South Africa, Johannesburg, Trinity Nkube, data and economic analyst, to give us update on that protest and some of these proposals to solve the energy or electricity supply crisis in South Africa. Thank you so much, Trinity. Good afternoon. I think you're muted. I did not hear you. If you could please unmute.
Okay, let's see.
Yeah, I can hear you now. I can hear you now, Trinity.
Okay.
Yeah.
All right, thank you. Thank you for having me. Sorry about that.
Yeah, so give us the update. Are the protests still on the streets? What's going on?
Very much so. It's very worrying. The electricity crisis has spilled into a political issue, which is unfortunate. So you see the two main parties in South Africa going at it, which is unfortunate because I think we need national solutions to this issue.
Right, Trinity. So how are you guys coping? Well, when you talk of electricity cuts back here in Nigeria, we have found some ways to cope. We have the generating sets. A lot of people have embraced solar, and other alternative as a source of, supplying power. How are you guys coping? Do you have a lot of generating sets there, generators? Do you have solar energy going on there? What's the alternative that is available for South Africans?
Very much so. That seems to be the trend where people are starting to purchase, the backup power. You're talking inverters, batteries, solar panels, and you name it. Unfortunately, this electricity crisis has come at a time when a lot of families, households, have also been dealt with an economic crunch. Therefore, while those solutions that you mentioned that are in Nigeria seem to be practical solutions, in South Africa, it is becoming extremely difficult for a lot of families to be able to afford those backup powers. So there are multiple solutions for those households that can afford those options that you mentioned. And then on the other side, from what I've learned, in the city of Cape Town, for instance, they are opening up a business model in which households that can generate more electricity, in fact, can sell excess electricity or power to the city of Cape Town. And we are waiting to see if other municipal or other cities can also do the same. I think this will alleviate the pressure from the national grid. And another suggestion that I've been seeing floating around has been, what if big businesses, in fact, can purchase some of these generators as well as any other backup power where the banks are actually, in fact, coming onto the forefront and offering solutions, financial solutions, where the businesses do not have to have capital expenditure, upfront to pay for these things. In that way as well, that would actually alleviate the demand for electricity across the country. So there are various solutions that are out there. It just really needs for the country to come together and have national solutions instead of politicking, as it may.
Yeah, unfortunately, politics just creeps into everything. So just before we let you go, Trinity, we hear of these voucher sequences, unique tokens, something to do with meter that is supposed to end on the 24th of November. Tell us about this and how, this is being used to overcome some of those infrastructural issues which Eskom has been facing.
I think from my limited knowledge around this payment of electricity and the voucher system and all of that, Eskom and the country at large has been dealing with issues around non-payment. So, for example, you were having certain households and certain municipalities that, in actual fact, owe billions of rands to Eskom. So for an inefficient parastatal, as we speak, it's also very difficult because, as you may have understood, there's an 18.65 increase, in tariffs, electricity tariffs, that are proposed, that are supposed to kick in on the 1st of April, and that is a bone of contention. Anyway, just to address your question, when it comes to the pricing and this buying of electricity and the usage of it, this system is supposed to be efficient in terms of the new system that is coming into place. However, I don't really see it as a solution to the actual challenges that we have. The challenges that we have are on the supply of additional generation of electricity. So I think it's just another secondary issue that can be tackled at some other time, because at the moment what we need is electricity.
Right, Trinity, thank you so much for bringing us up to date on that, and we really do wish you guys in South Africa the very best in handling this, because no power, no economic activity. Thank you so much.
Absolutely. No, thank you so much for having me again.
Yeah. And now let's go to Zambia, where the managing director of the International Monetary Fund, Ms. Kristalina Georgieva, has concluded a 4-day visit to that country. She met with students at the University of Zambia in Lusaka on Tuesday, as well as opening an IMF office in the African country's capital. Ms. Georgieva observes that Zambia is making tremendous progress on reforms at what is a particularly challenging time for the world economy, although more needs to be done, especially to deliver the jobs that Zambia's youth need. But these reforms, she says, are critical to strengthen Zambia's resilience and seize its opportunity, especially in agriculture, energy, and tourism sectors. And finally, on the program for today, Algeria Sonatrach has signed 2 agreements with Italian energy major ANI to boost energy security and fast-track reduction. The 2 strategic agreements outline joint future projects that will focus on energy transition, energy supply, and decarbonization. Under the agreements, the 2 firms will identify opportunities and implement technologies for reducing greenhouse gas and methane gas emissions. The partners will also outline energy efficiency initiatives, renewable energy development, green hydrogen projects, and CO2 capture and storage projects. That's the program for this midweek service. Thank you so much for being a part of it. We'll do it again tomorrow. I'm Ini John Mekwa. Enjoy the rest of your service.